Well, it's time. A lot of you have been asking for this, and we're going to do it. We're going to give an update on my number one cheap stock to buy for 2024. I uploaded this video on December 27th of 2023, and this has been one of my best performing videos I've had in a long time, so thank you for that. But this video has over 16,500 views. In this video, I talk about a small company called Flux Power, and that's what this video is going to be about as well. But ever since I uploaded that video, it's safe to say that you guys really like this stock pick, because since December 27th, Flux Power stock is up more than 60%. It's up 61.81%. And yes, I kind of have been avoiding talking about this stock more because I still think it's very undervalued and it's the best cheap stock to buy today. I said in my previous video, I think this is a very rare opportunity of a small cap growth company, so a growth investment that's also a value stock and a value investment. It is very rare to find this sort of opportunity. But before I upload public videos on new stocks I'm buying, I let all of my Discord members know. If you want my buy and sell alerts so you can know as soon as I buy or sell a stock, hit the join button located right next to the subscribe button or hit my Patreon link in the pinned comment. Me and my members, we've been kicking the market's butt over the last couple of years, and I don't expect that to slow down anytime soon. Now, it's not going to work out this great every single time where I buy a stock and then it just so happens that that stock goes up 60% after I buy it. That's just not how it's going to work. But the last thing I do need from you before we get into this video is for you to subscribe down below if you're new here or returning and not yet subscribed. I love seeing all the new faces pop into the channel. My channel's growing like crazy, so thank you to you and this amazing community. I think we have the best community on all of YouTube. Thank you. But let's go ahead and get into this. Why is Flux Power stock moving up so fast? A lot of it has to do with the fact that the company most recently reported their second quarter financial results, and these results were tremendous. Their gross margins improved to 31%. Their revenue increased 7% to a quarterly record of $18.3 million. They reported positive adjusted EBITDA of $300,000, which means they're moving towards cash flow break even. And as of February 1st of 2024, their backlog was basically $30 million. If you want a more basic understanding of what Flux Power does, I highly recommend you go watch that video that has 16,500 views on it. Click the eye in the top right hand corner. But a basic level understanding of what Flux Power does is they develop and sell advanced lithium ion energy storage solutions. So basically they sell batteries, lithium ion batteries, for the electrification of commercial and industrial equipment. Never before in my short investing career have I seen a management team as focused on margins and profitability and revenue growth as Flux Power's management team is. Their management team has business pedigree, people that have worked for Ford in upper level management, and that's not even the only example. It's just such a rare opportunity you find a company like this that's publicly traded and is clearly undervalued. On the screen now is a list of Flux Power's customers: Frito-Lay, Pepsi Company, Costco, Procter & Gamble, Walmart, Subaru, Nissan, Caterpillar, the list goes on and on and on. Their customer base right now is largely made up of Fortune 50 and Fortune 100 customers, and they've never lost a single customer. These customers of Flux Powers are looking for much more than a single transaction, a single purchase order of batteries. They're looking for a long-term relationship, and Flux Power has been able to deliver, which is why they keep getting more and more business from not only their previous customers listed here, but also new customers. In their most recent quarterly report, they announced they added the world's #1 wine producer to their list of customers. And you can see on the screen here this exponential increase in revenues that have been happening, as well as an exponential increase in gross margin and margin percentage. And if you take anything away from this video and this potential investment, let it be this phrase here: customer backlog increased to $30 million as record new orders of $26.6 million outpaced record shipments of $18.3 million. To dumb that down even more, in the most recent quarter, they had a record number of new orders that outpaced a record number of shipments that the company sent out. That is a very good problem to have as a company. And I already talked about the financial discipline that this management team has, but if you like to look at charts, there's a chart on the screen for you now where it shows the quarterly adjusted EBITDA trajectory of the company. And you can see since Q2 of 2022, adjusted EBITDA has been going up in a straight line. And then prior to the 2020 pandemic, it was a similar thing. Adjusted EBITDA going up in a straight line. And again, in Q1 of 2024, this is the first time that they've reported positive adjusted EBITDA. And they say this is driven by improved gross margins, which is exactly what has happened. Like if we go here and look at revenues versus cost of sales, we can see for the 3 months ended December 31st, 2023, they did $18.3 million in revenue, and their cost of sales was $12.676 million. Well, a year ago, for the 3 months ended December 31st of 2022, they did less revenue, which was $17.1 million, but they had higher cost of goods sold of over $13 million. And this is something the management team thinks is going to continue. Right now, gross margin at the company in the most recent quarter was 31%. Over the short term, they see that reaching 35%. So I view that in the next 12 months, probably throughout the rest of 2024. And then in 2025, they think they can expand their gross margin to 40%. And on the note of overall profitability, the CEO of Flux Power, Ron Dutt, made some really cool comments where he said that their facility can support up to $150 million of lithium-ion battery pack shipments per year. And then he says, "We are not capital intensive. As we double the size of that revenue, we expect only a modest amount of additional tools and some testing equipment and a few more people." And then the CFO followed up by saying, "We do have a lot of operating leverage here that we can capitalize on because a lot of the bodies we would add are production based, which is already in the cost of goods sold line forecast going forward." And he finishes with, "We have a lot of leverage there to grow the business without adding a lot of OPEX, operating expenditures." So this is a very key point that I think a lot of investors have missed, or maybe they're not missing it given the stock price is up 61%. But arguably, I think the stock is still very undervalued. I'll show you that in my price target spreadsheet in just a little bit. But what they're saying here is that they can double the size of their revenue without increasing the costs hardly at all, modestly increasing the costs as they double their revenue because they are not a capital intensive business. So Flux Power is going to turn into a profit machine over the next 12 to 24 months. And what gets me even more excited about this is the revenue growth initiatives that they just recently started to talk about. You see, currently and in the past, Flux Power has grown entirely organically within their capital resources, as the CEO says in the earnings call. But they have begun to explore and develop strategies, including those already mentioned, to build partnerships that can leverage our revenue growth, our technology, and our profitability, and achieve our goal of building scale to meet the needs of our top tier customers. These strategies that they're mentioning here involve partnerships for international sales. The growth that Flux Power has seen has been entirely domestic. All of their sales take place in the United States of America. So international sales represent a very, very strong revenue growth lever that the company is most likely to pull here sometime in the next 12 to 24 months. And this isn't just them, this is their partners and their customers that want them to expand internationally because Flux Power has such a strong reputation with these Fortune 50 and 100 customers. They also started discussing a potential partnership with a company that works on proprietary fast charging technology, which would be another revenue stream for Flux Power. And then lastly, they're really excited about this telematics. This is a software subscription that Flux Power sells, and they're actually going to sell it to one of these Fortune 100 customers to deploy on their entire nationwide fleet. This isn't just Flux Power's engineering team trying to be sneaky and steal an extra couple dollars of revenue and profits from these customers of theirs. This is highly in demand from their customers, and this is going to be the first telematics platform that's been released for this industry that Flux Power focuses on. And like I said, this is not something that Flux Power's management team has talked about very much. They just started to talk about this in the most recent quarterly report. Here's a sentence from this earnings call. "As we establish consistent and increasing profitability this year, we look to implement revenue growth initiatives that we are currently exploring and developing." The reason this customer list is so important to Flux Power is because it gives them and other potential customers of theirs Validation. If somebody's looking for a lithium-ion battery solution for their forklifts or their ground support equipment at airports, they can look at how far these other Fortune 50 and 100 companies have gone with Flux Power solutions. It gives them validation. That is a very big competitive advantage that Flux Power has. And the other thing here is, as these batteries go bad, who are these companies going to purchase new batteries from? Well, they're going to purchase them from their original supplier, Flux Power. So you can see here how this revenue is likely to snowball over the coming years, and this could become a very large company. Another thing that they mentioned in their earnings call is a high probability pipeline of potential orders that expand beyond the current year of 2024. There is extreme demand for Flux Power. And the best part is, they've been able to raise the prices of their battery packs on these Fortune 50 and 100 customers. Flux Power is a $90 million company, and they have pricing power on Walmart, on Frito-Lay, on Pepsi, on Procter & Gamble, you name it. Flux Power has pricing power, which is incredible for a company of its size. So I'm sure it's somewhat obvious why I like this investment so much. I do not own enough Flux stock. And despite its recent 61% increase in share price, I still view the company as 218% undervalued based on this year's numbers. Now, I actually made some adjustments to the spreadsheet. I'll go through them. If you're a keen viewer of this channel, you might notice that my price target for this year actually went down. And this is because I'm becoming more conservative with this, because I want to prove that even if a more bearish case scenario plays out, I think the upside is tremendous here. But I've actually decreased my sales estimations for this year, 2025, and 2026. I think these numbers are going to be higher than my current estimations, but Wall Street analysts have decreased their projections, so I thought it would be good for me to decrease mine as well. And if the company comes in and surprises everybody, it's even better. But this year in 2024, Wall Street has the company doing $67 million of revenue. I have them doing $73 million of revenue. In 2025, Wall Street has them doing $86.5 million of revenue, which is basically 30% growth. And I have the company doing $95 million of revenue. And Wall Street doesn't have numbers for 2026 yet, but I have the company doing $125 million of revenue. Again, if Flux Power follows through with this international sales opportunity, this fast charging technology, as well as this telematics platform that they're rolling out for their Fortune 100 and Fortune 50 customers, these revenue numbers are going to be way too low. But because there is zero confirmation of any of that happening, we're just going to go with what we know. But on this spreadsheet, which again is made available to my paid monthly members, you can join by hitting the join button or hitting my Patreon link in the pinned comment. You can see that I have gross profit growing 58% this year in 2024, 41% in 2025, and another 41% in 2026. Again, this is with what I view as sandbagged revenue numbers. But I have net income growing from $600,000 to $5.5 million next year, and then $13.5 million in 2026, which means this year I'm expecting earnings per share to be 4 cents. In 2025, 33 cents, and in 2026, 80 cents per share. One thing that I really like about Flux Power is their capital structure. They actually erased their at-the-market dilution program, meaning that unless they sign some sort of convertible debt, the total shares outstanding of the company are going to remain stagnant at 16.5 million. As investors in growth companies, typically you're fighting against the company because the company uses equity to raise capital. But Flux Power is already at the point of profitability, so they don't need to sell equity to raise capital. But you may also notice that I've actually decreased my forward PE multiples to 30, 35, and 40. I'm becoming more conservative with this just because it still proves that the stock is undervalued based on my numbers. But for 2024 and 2025, I used a price to sales multiple rather than a price to earnings multiple because it's typically safer to use a price to sales multiple until a company establishes profitability and then carries out that profitability and sees growing profitability for a couple years at least. So by 2026, that's when I finally start to take the forward PE multiple valuation into consideration. But based on this for 2024, again, I've actually decreased my numbers while slightly increasing gross margins. My price target for 2024, so the fair value of the company right now, I believe is $17.66, which represents 218% upside from here that I expect to see over the next 12 months. By 2026, and remember, this is probably a sandbagged number based on the growth initiatives that the company is likely to pull. I view the fair value for the company based on these sandbag numbers to be $28.16 in 2026. So that means by 2026, so over the next 2 years, give or take, I expect the stock to return me 407% in just a couple of years. That is incredible returns. And then after 2026, things get even more exciting as the company's snowball continues to grow and grow and grow and grow. And these revenues get bigger and bigger and bigger and bigger. And the profitability gets bigger and bigger and bigger and bigger. Quite honestly, if I had to buy one stock and sit on it for the next 10 years and never look at it, it would probably be Flux Power, because I think lithium ion battery solutions are going nowhere. And if some sort of new technology comes out, I think Flux Power is going to be at the forefront of that new technology, just based on the management team's history. But with that, don't forget you can get my buy and sell alerts and a lot of other perks by joining my membership, which you can do by hitting the join button down below or the Patreon link in my pinned comment. My channel and my membership have been growing like crazy. I hope that continues. So if you guys are new here or returning and not yet subscribed, please subscribe down below. With that, have a great rest of your day. Keep 10 toes to the ground and your chin up. Stay blessed. Peace out.